those are the consequences that I see. And of course, as the Fed indulges in QE to infinity, it just basically undermines the value of the dollar in terms of its purchasing power, which makes the situation worse. We are in a spiral, which is the end of this fiat currency dollar-based system. It is finished. And the question which I can't answer is how long will it take between now and that end point? I think it could be as little as 2 years. Might even be 1 year for all I know. I mean, it is actually very, very serious. There's no speculative interest in basically gold or silver. And on that basis, I think the turnaround when it happens, which is likely to be quite soon, will be very, very, very dramatic. The only effect really, which is of interest to this audience, is that they've hit precious metals. Gold is down something like 4 or 5%, silver down another, 8-9%. This is in the belief that, there's a flight into the dollar. Now, initially, there is a flight into the dollar. The dollar's trade-weighted index has recovered somewhat. But when people sit back and think just a little harder about what they should do, I think you'll find that reverses. We will see bond yields rise. That is already beginning to disrupt equity markets, which have fallen, to my mind, you might say that they've fallen heavily today. I don't think that's starting, hardly starting. I think we're going to see far greater falls there. I understand that what the Iranians are doing is they are allowing Russian and Chinese shipping through Hormuz, but stopping everything else. Now, whether that's true or not, I don't know. That's what I've been told. Now, the reason that there's going to be really no shipping going through Hormuz is not just that, but you cannot insure your ship. Basically, all Lloyd's insurance has been withdrawn for shipping going through Hormuz. So, if you can't insure your ship, you're not going to go through. And that's why the ships are piling up both on the western approaches to Hormuz and also the eastern approaches to Hormuz. I think that's the first thing. I think the second thing is that bond yields are going to rise. Why? Because this is, if you like, a shock, which it's an economic shock, which is bound to lead to, they call it a recession. A slump, I think, is probably the better word. A slump, if you like, due to higher energy prices, due to shipping disruption, whatever. And with that slump, what you're going to find is that the ability of the United States to service its debt is going to be fundamentally impaired. Because at the end of the day, what really matters in the debt market is the tax income that covers the debt and also the interest on that debt. Now, we know that America doesn't pay interest on the debt. The interest is notional. It ends up paying the interest when it matures, and they've got to roll it over into something else. But as far as foreign holders of this debt is concerned, they will see something which demands a far higher yield to justify holding it. But then you've got the problem of a debt trap. The higher the yield goes, the less attractive the debt becomes. I think we're on the verge of that. The implication of that is that with the bond market already, if you like, giving far better returns than the S&P index. If you look at the valuation base between the two, the long bond and the S&P is in a bubble. It is wildly overvalued. So rising bond yields on the long end is going to pop that bubble. And when that bubble pops, you've got to think, what is the Fed and what are the US Treasury going to do? Well, it's quite simple. They've only got one course of action they can take. And that is, they will do everything they can to support the market, support equities from sliding, because it is so important for overall confidence in the economy to have a healthy stock market. Equally, it's very dangerous to have a stock market which is not healthy. So they will try and support it. There is also, writ large, in every Fed man's mind, what happened in in 1929, 1930. What happened then was that as equity values fell, because equities were a very important part of overall bank collateral, the banks started selling selling that collateral as loans became uncovered. So in other words, you have the mechanics, if you like, of a crash, which are sitting in the wings. Those are the consequences that I see. And of course, as the Fed indulges in QE to infinity, it just basically undermines the value of the dollar in terms of its purchasing power, which makes the situation worse. We are in a spiral, which is the end of this fiat currency dollar-based system. It is finished. And the question which I can't answer is how long will it take between now and that end point? I think it could be as little as 2 years. Might even be 1 year for all I know. I mean, it is actually very, very serious. And this is something which, at the moment, markets are just sort of sitting there, sort of just adjusting slightly. And of course, the system, short of silver, saying, whoopee, we can bash the price of silver and maybe we can get a bit back. Well, dream on. There's no speculative interest in basically gold or silver. And on that basis, I think the turnaround, when it happens, which is likely to be quite soon, will be very, very, very dramatic. Now, I can't say from what level that turnaround will occur, because what we're seeing is actually something which I think is really quite frightening. And the markets have yet actually to wake up to the full implications of the American error of trying to take on Iran. But they will, I think, over the next 2 weeks. And by the end of March, you might well see that bubble is really popped. So that's how I see it. I think the thing that is interesting in this will be China's reaction. I mean, on two levels. Firstly, on the military level, China and Russia and Iran signed an agreement back in January that they would effectively support each other in the face, if you like, of aggression. And this is not like the NATO one, where if one of the members gets attacked, then all the others have a duty to enter into war with the attacker. No, it's not that at all. It's a lot more subtle. So I think what you'll find is that there will be, if you like, background support for Iran from China and Russia. Now, apart from the obvious technology, maybe even some hypersonic missiles, whatever. I mean, we'll be able to see actually whether that might materialize. There are lots of stories about that. I think that the real thing was indicated to us by China turning around, I think it was on about the 8th or 9th of February, and telling its banks and insurance companies who held US treasuries under license from the PBOC that they should reduce their positions. In other words, it was an instruction to sell. Why would they do that? I suspect, I don't know, but I suspect that their reading of the situation was that it was inevitable that Trump would move America into a war against Iran. Now, that being the case, this was a move, if you like, which indicates quite clearly that China is moving away from the dollar, I mean, not just for trade purposes, but entirely, and will soon protect itself against a collapsing dollar. You could even go one further than that and say that this becomes a currency war. China could well do something, if you like, about the dollar and its status in terms of international value to undermine that value. I mean, he could, for example, turn around and say, we have 30,000 tons of gold with which we are prepared to back the yuan. Now, that statement would kill the dollar. Of that, I have absolutely no doubt whatsoever. I don't know they would be there quite that aggressive, obvious, maybe. But you can see that there is some scope, I think, for China to wage a financial and economic war against America, which means that it doesn't have to declare a military war against America. But the reason for doing that would be to protect its alliance, its tripartite alliance with Iran. And Iran is also central, in a way, to BRICS, and not only BRICS, but also the Shanghai Cooperation Organization. It is a member of both those organizations. So this is, I think, very, very important. Iran also supplies oil to China. Now, some talk about, well, between Saudi Arabia and Iran, if China's not getting its oil, then this is going to be a huge, great problem for China. Yeah, I think China saw this one coming. And I think basically that she has good stockpiles of oil. Not only that, but she is not quite as dependent on oil from the Middle East as many analysts actually think.